Hey everybody, Marcus here, Keller Williams Realty with a market update for Ozaukee County for August 2019. I get the question every day, how's the market? And unfortunately, it's not a simple one-line answer. There's a lot more to it. And I've learned over 20 years in corporate that good decisions are usually based on good data and on a good strategy. So I'll be switching back and forth here a little bit between my screen and some slides. I'll put myself up here in the right corner so you can look at some data and not at me all the time. This is a map here of Ozaukee County, and you can see that I'm here in a little subdivision right smack between Cedarburg and Mequon. And if you don't have that much time, I'll just give you the highlights up front. We had a good month in August 2019 with 126 listings sold. That's up 12.5%. As you probably know, the market has been choked by a lack of inventory, so it shouldn't come as a surprise. Inventory has been up by 12.5%, and that caused sales to go up by 12.5%. So inventory is still very, very low. We'll take a deep dive into that a little bit later. But the other trend that we're seeing is that in August, accepted offers have been lower, almost a third lower than what we usually see. And that is a little bit of an outlook for the future. Fewer accepted offers in August means fewer closings and fewer sales in September and October, which will mean that inventory is going up. So if you're on the buying side, that's great news because you probably have tried to get into a house and couldn't even see it before it sold. So more inventory will help you. If you're on the selling side, now more than ever, it's important that you are purposeful and strategic about selling your home and that the marketing is executed on a very high level. So that just matters and makes a difference. As far as new listings, we're pretty much flat here again with 135 new homes hitting the market in August. And you will probably like to hear this. The median sales price is up about 6.6%. Now, this is year over year compared to August of last year. That doesn't mean that your house is necessarily up by 6.5%, but that means the median is up. And if you are interested in your property in particular, where it might be in value, then just let me know. I'll be happy to give you an estimate of where your house is currently in market value. Chances are you've picked up quite a bit of equity over the last years. So what else is new? Interest rates are very, very low. I'm closing later today on a property, and my client actually got a 30-year fixed rate for 3.85, which is pretty much cutting rate at the moment, or cutting edge for a rate at the moment. And so that helps on the buying side a lot because home prices have come up over the last years, and having a very low interest rate on the mortgage helps with the affordability quite a bit. And that's just a function of what's going on the bond market. So, a lot of people think the Fed is driving 30-year mortgages. That's actually a myth. It's really driven by the bond market. And with everything that's going on, we're fortunate to see historically low rates right now. So I did not believe that we would ever see, anything less than 4.5%, 5% again. And yet here we are, 3.85, fantastic rate. So let's take a look a little bit more into the details. Here's a year-to-date summary for Ozaukee County. You can see absorption rate, which is nothing but a fancy term for months of supply. So we have about 3 months worth of supply. That's still very, very low on inventory. 6 months would be a normal inventory. And then you want to pay attention here to the median. Median list price is up 4.8% and median sales price is up 6.6%. Median sales about 350 now in Ozaukee County. And you can see here on the bottom, we got CDOM, cumulative days on market, which is very different between the median and the average. Why is that? So the reason for this is that most of the median homes around 350 will sell very, very quickly. Most of the high-end homes, I would say 700,000 up to 1.5 million, maybe more, they sell, oftentimes slower. That has to do with the pricing sometimes. and it sometimes takes 2 or 3 agents before the listing prices come down to where a savvy buyer says, okay, that's, it's worth $1 million now. So these homes tend to sit a lot longer on the market, and that's why you see the average a lot higher than the median around the $350,000 price point, if that makes sense. They go a lot faster. So you have two very, very different markets here. 700,000 and up is very different than 350 or 400,000. Okay, what else do we have here? Inventory and sold units per month. So this is 2019, and I'm going to bring up 2015 in comparison here. So what you have here is the number of listings that are currently for sale, active, that's the red line. And you can see that inventory has been creeping up over the 300 line now, which is fantastic. And it gets us a little bit more towards a normal market. We should see a lot more inventory, but here we are. And what you also can see here, we have new listings. And so what happened early in spring, and I'll get back to that later, is that new listings came out, quite strong. And this line crossed with the sold listings here. So the sold listings were actually slower than the new listings. More inventory was coming on the market, which is driving total inventory up here. But it also had an impact on pricing, and I'll show you that in a minute. Just as a comparison, number of listings on the market, if we look back same time frame in 2015, you can see here about 500 houses on the market for sale. So a lot more inventory in 2015. And that was not a bad year by any standard. That was, we already came out of the real estate crisis, the mortgage crisis we had in 2009, 2010. And this is normal inventory. I'm just pointing this out because I want you to be realistic what that means, that inventory is going up. It's still very, very low. So the market's slowing down a little bit, but it's slowing down from going 110 miles an hour to 90 miles an hour. We're still going, way over the speed limit. So still very hot market. So if you break this down, you can see here a breakdown over the price ranges. So you have here the different price categories. Most importantly for Ozaukee are 200 to 250, 250 to 300, and then 300 to 400, 400 to 500, and then here you have the high-end market. And what you can see here in green, you have the sold listings, and in blue, you have the active ones. And usually you see in most categories, the sold listings are almost as many are selling as there are in the market. So take a look here at 300 to 400. So almost as many are selling as there are in the market, except when you look here on 500 and over, you can see there's a lot more listings on the market than there are available. So very different market if you go 500 and up, and I would say it's even more pronounced if you go $700,000 and up. All right, what's going on with list prices? So interesting here is that in spring, you look here at January and February, the sellers came out super confident and said, we're gonna jack up the prices because the market is so hot, inventory is so low. And they did that, and the buyers did not agree with them. So if you look here at sold inventory, that stayed quite a little bit lower. And overall, you can see that when you look just at active inventory, median list price here, it used to be in the 300 to 350 range. Now we're in the 400 to 500 range. So that's going on with list prices. Inventory, in terms of monthly supply, we are increasing in inventory. So technical term absorption rate, but really just a fancy word for how much inventory there is and how many months will it take to sell it all off. So how much supply do we have expressed in months? And when we look back, 2015 was a healthy market. We had about 6 months worth of inventory. So you can see this puts it a little bit in perspective. Even though we're over 3.5 months now, it's still very low inventory and is still very, very fast-paced market. Sold to list price, this gives you a little bit of an idea of how much negotiating is going on. So we're hitting here almost 99% in June and July. Now we're coming down to below 98, more like 97%. So this is the ratio of what people are asking for the home on average and what they're getting for the home. So this gives you a sense for how much you can negotiate. In January, you've seen some discounts here. And if you compare that with 4 years ago, you can basically see the same pattern, just that negotiations were a lot more not plentiful, but also a higher percentage rate, mainly because there was more inventory. So days on market were longer, and so there was more negotiation. Speaking of days on market, here we are with currently around, I would say, 80. This is average again, CDOM, so that's a little bit higher. Remember the 500,000, 700,000 and over inventory. So this is driving it up, but same data here from 2015. If you look at this, you can see between 120 and 140 days on market. So this is way different than what we're seeing here at the moment.